Module number 2, trading is timing. The Forex market is made up of 3 main sessions: the Asia session, the London session, and the New York session. We're going to mainly use these 3 sessions to enter our trades or know exactly when to take profit. So no matter where you are located in the world, you can take advantage of these sessions to enter trades. So in this module, we will dive into this, and this is going to be super interesting. First thing first, let's understand the purpose of each trading session. Let's start with the Asia session. The main purpose of the Asia session is to build up liquidity, usually by forming price ranges like this one. You can see that the market is moving in sideways, making higher highs, higher lows, higher highs, and this is a perfect Asia range because we are building a ton of liquidity above and below each lows. This Asia session range sets the stage for the London session to take advantage of these price levels. What I mean about that is that, as I said, the Forex market is a zero-sum game. If a bank, let's say bank A, wants to inject thousands of lot size on the market, they have to find a huge liquidity area. And in that case, there was a huge liquidity area being built around this region. What the market did, the market went into this liquidity area with speed and momentum, and this is where majority of buyers have been taken out from the market. And when someone is taken out from the market, his liquidity becomes what we call available liquidity. And this liquidity is going to be used by the institutions so they can enter their large amount of positions, thousands of lot size, to move the market and make a profit, to finally take profit. Okay, so I prefer when the Asia session range forms clear ranges, because we have 2 types of Asia session. You have this clean Asia session range, and sometimes you will have this overextended Asia session where I'm not very interested to take trades. You will see why in a second. So the size of the Asia session matters. Okay, a tighter Asia session range often leads to significant price movements at the start of the London session. This is something that you need to measure every single time you want to take a trade. You need to measure the distance between Asia low to Asia high. If we have a range between 10 to 20 pips, that indicate us that we're going to have aggressive movements above and below Asia low at the London Open. And this is exactly what we did here. We started the London session by taking out Asia low, and after that we took out Asia high, where a lot of liquidity was sitting. Okay, if we analyze a little bit this scenario, we can clearly see that, I'm going to zoom in a little bit, we can clearly see that a lot of liquidity was sitting above Asia high. Why? Because once again, what do we have here? We have a break of structure to the downside with speed and momentum. Where do you think this breakout traders will be placing their stop losses? All these guys will be putting their stop losses above the last structure high. Okay, and this is also Asia high, so this is a strong liquidity area that would have attracted price, and this is what happened here. This is the type of trades we aim for. We need to identify where is the most relevant liquidity area and see if we can have a trade opportunity to trade in line with the liquidity, and potentially after that away from this liquidity zone now liquidated. Okay, So very important, guys. Understand and measure the Asia session low to Asia session high. So I'm gonna zoom out a little bit now, like this. Up. I also look at something interesting, which are the -1 and +1 ADR levels. So what you need to do again is measure Asia high, Asia low to Asia high, and report the size of this range above and below. That will give you some potential confluences for taking trades. Okay, of course we're gonna use also some higher time frame analysis, and also we will look left to see what happened on the left side of the market. And if we have multiple confirmations and confluences on this level, this can be a great market entry. Okay, so the ADR is very important for the Asia session. So as you can see, Asia session, we have three things to remember basically. The size, the tighter the Asia session, the more likely we're gonna have aggressive movement during London. Secondly, measure the -1 and +1 ADR. And finally, you need to understand where the liquidity has been built during the Asia session, because majority of the time London will take out this liquidity built during Asia. Okay, London is going to do it. Now, what do we have after the Asia session? We have the London session. So what is the purpose of the London session? As I said, keep in mind that when a bank wants to trade large volume, like 100,000 lot size at the London Open, they need to make sure there's enough liquidity to enter the market. Sometimes the financial institutions have liquidity problems. That means they want to enter, for example, a short position, but they are checking the order books and they see that there's not available liquidity. So what they're gonna do, they're gonna create trap, fake reactions to trick traders on the wrong side of the market to, after that, take them out and take all the liquidity available to potentially move away from that zone. Okay, this is very important, and that is why traps will be created during the Frankfurt or London session to bring traders on the wrong side of the market. So this is what happened here. This is an interesting example. We have the Asia session, we have equal highs being taken out, break of structure. Guess which traders are interested by taking a short position? Smart money traders. And what happened after? All of them have been taken out. So if we recap a little bit what happened, what do we have? We have the market doing this, equal highs taken out during the Frankfurt session, breaking structure low, and this is where a lot of traders that are using smart money concepts will be entering the market. And if you right now behind your screen you are using smart money concepts, you have seen that sometimes it's working and sometimes not. It's all about identifying properly where the liquidity has been built and put yourself in an institutional trader shoes. Simple as that. Okay, and as you can see, when we came back here, they made a fake reaction creating 50% body candle dojis. Okay, I don't know what's your experience with trading, but every trading strategy says that when you see dojis you should take reverse positions. Okay, and this is what happened here. They created a fake doji, fake reaction to the downside to stop everyone out. Okay, so the New York session purpose. If the London session seems uninteresting, it's often because liquidity is being built up, either on the buy side or the sell side, and this can actually create trading opportunities during the New York session. So here's an example. For example, here what happened. is that we started the Asia session by doing move like this. Okay, we had equal highs. Price took out equal highs during the London session, made a break of structure, came back for a mitigation, and now we have a lot of traders getting involved on short positions. And this type of setups will most likely happen during news. You will see with experience, and I'm going to show you examples on this 2-week intensive program, that when we have this type of setups, everything looks beautiful. Everything looks, you know, this is too obvious when the market is doing things like this. When it's too obvious, at some point, it's because something huge will happen. And this is what happened here. That was before news. Asia low being taken out, and all this sell side liquidity being taken out by this move to the upside. Okay, so I'm gonna dive into more examples. You will see that this is very, very interesting, because even if you have news, if you understand clearly the liquidity, you can take trades. I want to show you very quickly this example. I can't wait to show you the magic. Basically, what do we have here? We have equal highs, okay, break of structure to the downside, some breakout traders entering the market here, placing their stop losses here, taken out during London session. We have now a true break of structure, because this move here, this break of structure, is occurring after the major trap done during the Frankfurt session. Okay, price came back to mitigate the point of interest, made a new break of structure. So we have now break and retest traders and breakout traders getting involved on short position. Okay, this is obvious here that we are building a ton of sell side liquidity. And when we finally took out the last buy side liquidity, what do you think is happening? A huge push into everyone's stop losses. Okay, that's why you will see in this course, in this 2-week program, that it is pretty important to spot the right liquidity zones in order to take profits too. So now what we're gonna do is we're gonna dive into a trade, 2 trades I took on GBPUSD, and we're gonna go on tradingview.com so I can show you my entry points. I think this is where you're gonna learn the most, to see exactly what I did, and so you can understand and replicate it on your next trades. Okay, so that was GBPUSD 19th of August 2024 at the time I'm recording this module number 2. So let's go on TradingView. All right. So here we are on the charts, GBPUSD, and what I want to show you is the process behind taking these 2 trades. This video will help you train your eye and also develop a deep technical analysis thinking. So what I'm going to do is use the replay mode so you can understand what I was looking for candle by candle. So what we did here, as you can see, this is the start of the Asia session. And as you can see, you will see in different type of brokers. This is FXCM. There's also forex.com and Wanda. The candles are quite different. So what I'm doing usually is that I'm not looking at the first hours of the Asia session, because this is where we have high spread, we do not have a lot of volume on the market, and we do not pay attention to what is happening here. Okay, so what happened during the Asia session is that we have been ranging. So I'm gonna take the charts to exactly when I woke up and show you exactly what I was looking for. So I usually wake up at 8 a.m. Geneva time, and I'm looking at the charts to see what happened. So I'm waking up around this time here. So I woke up here that day on GBPUSD, and I saw one thing. we've been building, clearly you can see it guys, we've been building buy side liquidity. That means a lot of buyers are getting involved on the market, and we have a lot of stop losses sitting just below these lows. So let's try to understand what happened. We have here a break of structure high. Okay, so these traders entering the market here are going to be placing their stop losses just below. Okay, market came back for a mitigation of the smart money concept strategy. So these guys put it their stop losses just below. Okay, so I'm gonna mark it better so you can understand exactly what I'm looking for. We have first thing first the stop losses from the breakout traders, and we have also the stop losses from the smart money traders entering the buy position when the price is returning back to this POI on the 15-minute. Okay, so we have quite stop losses here, different type of stop losses. We also have here another break of structure to the upside. So where do you think these buyers are going to place their stop losses? Just below this low. Okay, because this point is the point that led to this break of structure. Okay, so what do we have next? We have another break of structure to the upside. Okay, so these breakout traders placing their stop losses here. Okay, these guys entering the market here are going to be placing their stop losses just below that low. Okay, what do we have also? We have break and retest traders getting involved on the party. Okay, we have resistance becoming now a support. And usually break and retest traders are using a zone to enter their trades, not one single line. That's why this is a relevant break and retest zone. So we have the first type of traders that are entering the market here. These guys are going to be placing their stop losses here. Okay, and we have also the ones that are waiting for break of structure. So these guys entering here are going to be placing their stop losses here, plus we have some breakout traders entering before the London Open. So this is what I saw exactly before getting on the trade, and this is what I saw when I woke up. I saw clearly that we've been building buy side liquidity. And the most important thing you need to do here is to identify where is the last, when we have a push to the upside like this, where is the last buy side liquidity. And in that case, this is here, the last buy side liquidity. But that's not all. These are the stop losses location. But these guys were in profit. Every trader, if for example the breakout traders that bought the market here, is right now in profit. So what do you think these traders are gonna do? They're gonna protect their position. So these traders are gonna be placing their stop losses at break even. And now the liquidity is here. Same for these traders. Okay, the traders that have been buying the market from this region are now in profit. Some of them took out their profit. Okay, that's cool. And some of them are still in the position. So these guys will be putting their stop losses at break even. So now this area is relevant for the price. This is not relevant for the price anymore because majority of them are already out of their positions and others are just running at break even. So this is very, very important to identify the low of the push to the upside and see if these traders have been able to put their stop loss at break even. So right now we can clearly see that the remaining liquidity is around this region. Okay, so I saw this when I woke up. I saw a clear buy side liquidity. I've identified where can be the last push, okay, the last liquidity. And then I saw the London session doing this, okay, creating even more liquidity, okay, and that was around 9:55. I was behind my charts and I saw nothing clear for shorting the market, okay, nothing was clear for shorting the market. That was here Frankfurt high, okay, and when we have Frankfurt high doing some type of equal highs, I don't want to get involved on a short position because I expect London to make at least a trap, okay. So what the market did, London made a move to the upside, bringing even more buyers on board, creating what can be a potential smart money trap here, okay. And I decided to move away from the charts and come back at New York to see if we can potentially have some short opportunity, okay, and target this liquidity and potentially have maybe some long positions when we're gonna move potentially away after liquidating this liquidity area. So what the market did, the market came back, made some, tapped into the smart money trap. Smart money traders getting on buy position, fake reactions. This is what I'm talking about, guys. This is very important. Banks and financial institutions are going to be making fake reactions. Where do you think these buyers are going to be placing their stop losses? Just below, okay? And this area will attract the price. What happened next? Boom, all these buyers have been taken out. So when a stop loss is taken out, you can put, if you want, this on it to yeah, understand that these buyers are now out of their position. So these buyers are now out with speed and momentum. Okay, the market is coming back here and we're about to start the New York session in a minute. Okay, so this is where things started to be very interesting for me. Why? Because as you can see, all this buy side liquidity is now taken out from the market. Okay, all these guys have been stopped out, these guys too. And I say, okay, now that we have made a move into the liquidity, where is the resting liquidity? The resting liquidity is now to the upside. We have been building during this down move sell side liquidity, okay? We have traders shorting the market from here. We have break and retest traders also. We can use that zone as a break and retest area. So we have a lot of stop losses sitting here right now. These are the two questions you should ask yourself before taking a trade. Am I taking a trade potentially away from a liquidated liquidity zone? And am I trading into the liquidity? Okay, that's very, very important because I see so many traders that want to enter a trade, but there is nothing relevant to target. And in that case, you can clearly see that we have multiple break and retest, and we can clearly see that the liquidity, the resting liquidity is sell side liquidity, okay? So what is even more interesting is that that was here 2 p.m. Geneva time, the start of the New York session. So what do you think is happening when we have the start of the New York session? We have a lot of traders behind their charts, hungry to take trades and make money. And at each New York session, we potentially have traps. So what the market did at the New York Open, we can clearly see that the market produced a break of structure to the upside. We can clearly see that we have here a shift in market structure. We have been breaking structure low. Here, same thing here, breaking structure low, breaking structure low, breaking structure low. And now that is the first time that we are breaking structure to the upside. And this is where things are interesting. A lot of traders right now are looking to take a buy position, okay? And this is what we can expect to be a smart money trap, because we are at the New York Open, and during the New York Open, we're gonna have manipulation majority of the time. So what the market did, the market just made a move to the downside and a reaction. So all these buyers are still in the trade, okay? Even if some guys bought the market from this region, they placed their stop losses here. So right now they are in profit. And I said, okay, if the financial institutions wants to make a move to take out this resting liquidity, what they're gonna do first? They're gonna make sure to take out the early buyers. And as you can see, we have a break of structure to the upside for the first time since the London session at the New York Open with a strong bullish candle. And this is typically a manipulation movement to bring buyers on board, to bring early buyers on board. So what I decided to do is to take a trade with the potential trap into the liquidity. So I marked this 50% body candle with good leg out, which is the barrier. I'm going to cover this in, I think, week 2. It's going to be super interesting too. The barrier is usually the last order block that pushed the price into the zone, okay? We came back to this barrier. I'm going to show you the 1 minute. And I usually wait for the price to tap the 50%. And as you can see, when we tap the 50%, look the reaction we made. Strong reaction. Okay, we came back higher, and then we broke structure to the downside. And this is where I decided to take a short position. My goal for that trade was to take a trade in line with the liquidity, because the most relevant liquidity was sitting here. A lot of buyers were in profit, okay? Some of them were at break even, and some of them were putting their stop losses here. So I said to myself, and I decided to put myself into an institutional trader. And I say, okay, if they want to take out this liquidity, they have to first take out this one, because this is a relevant liquidity before the New York Open. And if I want to enter like 10,000 lot size, I need to have enough liquidity. So I decided to take this short position when the price came back here. I've been triggered, and now we made the reaction into retail traders stop losses. And this is where I took profit. So now these early buyers are now liquidated. Whoop, they are out. And this is when things are getting very, very interesting. I know that right now, by looking at what happened during the start of the Asia session, we do not have any buyers left on the market. That means I can potentially jump on a trade, and first thing first, target these stop losses, then these ones, and potentially this high. And this is what I decided to do. I decided to look at the charts, candlestick by candlestick on the 1 minute time frame, to see what we were doing. So we took out the liquidity and we made a minor break of structure. And I have a module, I think, on how to identify fake and buy zone, fake sell zone and fake buy zone, and also identifying relevant break of structure. This one for me is a relevant and a true break of structure. Why? because this break of structure is occurring after a major trap being done. So right now we can expect the banks and the financial institutions to move away from these liquidated zones. So I waited a little bit, okay, and I saw the price breaking this structure. So I said to myself, let's enter a trade on this 50% body candle, and first thing first, target this last high where a lot of stop losses are sitting and take some profit. So what the market did, the market came back to my entry point. I've been triggered. We came back a bit lower, and then we made the move. And now I've been putting my stop loss at break even, and look at what the market did. The market took out now these sellers. Okay, these sellers are now out of their position. They have been stopped out. Where is the resting liquidity? The resting liquidity is now here because all these break and retest traders put their stop losses above. This is where we have a resting liquidity, and this resting liquidity will attract price. What the market did, the market took out this liquidity and decided to continue above to it the take profit. That was a 1 to 14 risk to reward trade, but I let the trade open a bit more because we had on the left side some interesting liquidity areas from the higher time frame, and yeah, we just exploded to the upside. This is how basically I took these two positions on GBPUSD. And the work you need to do is to identifying properly where the liquidity has been built. If I was like every trader on internet, just waiting for the price to give me break of structure to enter a trade, I would have been stopped out here. I would have been stopped out here also. So trading is not about drawing rectangles and lines on your charts. It's about understanding where the institutions want to drive the price in order to take out the liquidity and then potentially move away from these liquidated zones into now a resting liquidity. And now this one is taken out. So I'm going to mark it as taken out. Okay. And then the history repeats. Now we have buyers on board, and someday, maybe the next day, they will come back to take out these buyers that are at break even. That's when also you need to know when to take profit. So this is basically why I took these two trades. I want to make sure to not miss anything, but as you can see, your job as a trader, the first thing you should do when you jump on the charts is to identify the stop losses areas and also the break even areas. And when you see a move to the upside like that, tell yourself where is the last point of liquidity. Okay, and in that case we had stop losses here, but these guys moved their stop losses in this region. And many traders on Instagram, I posted this trade, went up to me and asked me why I haven't waited for the price to take out Asia low. Simply because Asia low in that case is not relevant in terms of liquidity. That's simple. Simple as that. Why will the price goes back to this area? There's literally nothing here that is relevant for the price. That's why I decided to enter the market here, which was also Asia midline. Asia midline can be a confluence to enter your trades, and we have sometimes huge bounce from it. Okay, so this is how I entered these two trades, and that is only the start of your journey in this 2-week intensive program. I'm pretty excited to show you what we're going to do on the next modules.